Every time you turn on the television or open your computer, what do you see? You see scary commercials with ominous music telling you that the stock market is about to crash, that inflation is going to destroy every single dollar you have saved, and that you need to roll your entire 401k or traditional IRA into physical gold right now before it is too late. And I know what happens when you watch those ads. You get scared. You worked 30, 40, maybe 50 years to build your nest egg. You are either sitting in retirement right now or you are just a few short years away from hanging up your hat. You do not have time to make up for massive losses in the market. So when someone promises you that a Gold IRA is a safe haven that will protect your life savings, you start to wonder, should I do this? Is a Gold IRA the secret to protecting my future? Today, we are going to get real. We are going to strip away the panic, strip away the flashy sales pitches, and answer the exact question, who should actually invest in a Gold IRA, and who should run as fast as they can in the opposite direction. First, I need you to understand what a Gold IRA actually is. A Gold IRA, or a self-directed precious metals IRA, is an account that allows you to hold physical, tangible gold bars and IRS-approved coins inside a tax-advantaged retirement account. It has the same tax benefits as a traditional or Roth IRA. But here is the thing that many people do not realize: you cannot keep this gold under your mattress, you cannot keep it in your home safe, and you cannot put it in a local bank safe deposit box. The law requires that an IRS-approved custodian manage the account and that the physical gold be stored in a secure depository. Now, why are people so drawn to this right now? Because gold has a reputation as a store of value. When paper currencies lose purchasing power, when geopolitical tensions rise, or when the stock market goes on a roller coaster ride, physical gold often holds its value or moves independently of paper assets. That sounds comforting, doesn't it? It sounds like an insurance policy for your money. But I need you to listen to me very carefully, because gold is not a magic potion, and a Gold IRA is not free. Let's talk about the dark side that those slick salesmen never mention on the phone. First, fees. When you open a regular brokerage IRA and buy index funds, your account maintenance costs are practically zero. But with a Gold IRA, you are paying a setup fee, an annual custodian fee, storage fees to the vault, and insurance fees to protect that metal. You could easily end up paying $200 to $300 or more every single year just to hold that metal. Why does that matter? Because if you have a smaller retirement account, say $20,000 or $30,000, a $300 annual fee is eating up 1% of your total balance every single year before you even make a single penny in growth. That is unacceptable. Second, gold does not generate income. Physical gold just sits in a vault. It does not pay you a monthly dividend. It does not pay you interest like a bond or a high-yield savings account. The only way you make money on gold is if someone else is willing to pay more for that gold in the future than you paid for it today. If you are retired and you need your investments to generate reliable, monthly income to pay your electric bill, your groceries, or your Medicare supplement premiums, physical gold inside an IRA cannot pay those bills for you unless you liquidate it. Third, markups and spreads. Gold IRA dealers sell you the gold at a markup above the spot price, and when you are ready to sell it back to get cash for your required minimum distributions, or RMDs, they buy it back below spot. You lose money on the way in, and you lose money on the way out. So let's answer the question, who should not invest in a Gold IRA? If you have a modest retirement account, anything under $50,000 or $100,000 total, you should not open a Gold IRA. The ongoing storage and custodian fees will eat away at your principal. If you need income to live on right now in retirement, you should not open a Gold IRA. You need dividend-paying assets, high-yield savings, CDs, or reliable fixed-income investments that create cash flow. And if you are acting out of sheer fear because a salesman told you the financial collapse is coming next Tuesday, stop. Never, ever make a financial decision out of fear. Fear makes you do foolish things with your money. A Gold IRA is appropriate for a very specific type of investor. Number 1, you have a large, well-diversified retirement portfolio. We are talking hundreds of thousands of dollars or more, and your basic living expenses and cash flow needs are already completely covered by Social Security, pensions, dividend-paying investments, or annuity income. Number 2, you are looking for true asset diversification. You already own stocks, you already own bonds, you already have cash, and you want to take a small portion of your wealth, and I mean no more than 5% to 10% maximum, and place it into a tangible asset as an absolute backstop against long-term currency devaluation or severe economic uncertainty. Number 3, you have a long-term time horizon for those specific funds, meaning you do not intend to touch or sell that gold for years to come. If that is you, if you have $500,000 saved, your living costs are covered, and you want to put $25,000 or $30,000 into a Gold IRA purely as a 5% hedge, then fine. That is a reasonable, controlled asset allocation strategy. Here are your exact, actionable takeaways right now. First, assess your total portfolio. If you want exposure to gold without paying hefty storage fees or dealing with self-directed account custodians, look at low-cost gold ETFs or precious metal mutual funds in a standard IRA. They give you price exposure to gold instantly, liquidly, and without high annual vault fees. Second, if you insist on physical precious metals inside a self-directed IRA, shop around for fixed-fee custodians rather than percentage-based custodians, and insist on seeing the exact markup price on every single coin or bar before you transfer a single dime. Third, protect your peace of mind first. Make sure your liquid emergency fund is sitting in a high-yield savings account where you can touch it whenever you need it, and make sure your primary retirement portfolio is built to sustain your lifestyle, not to chase fear-based sales pitches. Your money is your security. Protect it, respect it, and never let fear drive the driver's seat of your financial future.